All right, Josh, stick around because we've got Disney earnings now out. Shauna walking us through those numbers there.
Yeah, Kiko, so let's get to the headlines here. Beating on EPS, $1.03. The estimate was for 99 cents. Revenue coming in just a bit light, $22.33 billion. But one of the big headlines from this earnings report, it's a big surprise when it comes to the streaming losses. Disney able to cut its loss in streaming direct-to-consumer business here to $512 million. That's down from more than $1 billion a year ago. Also coming in better than expected. The street was bracing for a loss of $777.7 million. So again, a narrower loss than what the street was looking for when it comes to the DTC business, their streaming business, $512 million. Obviously, good news here for investors. But when it comes to the subscriber numbers across the board, coming up a bit like Disney Plus subscribers, 146.1 million. Estimate was for 154.8 million. ESPN Plus subscribers also just shy of the street's expectations, 25.2 million. Hulu subscribers also coming in a bit light. Parks, we know that is a key, very important division here for Disney. Operating income at $2.43 billion. That was up 11% on a year-over-year basis. Profit from its traditional TV business, 23% decline there to $1.89 billion. But if you're looking for some good news in this report, it's a better than expected loss in their streaming business, $512 million. Again, the estimate from the street was $777 million. But we're still looking at some pressure, Akiko, in extended trading with the stock off just about 0.3%.
Yeah, I mean, obviously those sub numbers, something that investors are going to focus on just given where streaming has been. But it's interesting to me to look at some of the color we're getting on the park side, because, Shauna, we've had so many conversations about the decline in at least what we have seen in terms of visitors to parks, at least here in the U.S. But looking at this release coming out, the company saying higher operating results at international parks. They saw a growth at Shanghai Disney Resort, to a lesser extent Hong Kong Disney as well. This was due to the park being open for all the current quarter compared to 3 days in the prior quarter. So a little more color, at least internationally as well, as we try to get a better gauge of what's happening in China, which has been a significant market for Disney there as well. So some interesting numbers coming through here on the park side. And to your point, when you look at the headline number there, certainly not as bad as investors expected at a time when we've seen these reports of declining visitors.
Yeah, Kiko, the streaming number really stands out to me, right? When we think about what the streaming story has been for all of the streamers, we went from talking a lot about subscribers being added and that being the big number that we watch here. You want to see subscriber beats, we're talking about growth, to sort of this shift to profitability. And so I'm interested to see how the stock is going to react once we get kind of post-earnings call here and we think about just Disney Plus itself as a product. Disney's such a big company where it's hard to really focus on all of it at once here. But from that streaming perspective, to see them have that big of a beat and only lose $500 million when the street had been expecting them to lose $700 million. They had, of course, a year ago been losing over $1 billion in that business. So really making big improvements there certainly stands out to me. Of course, not adding as many subscribers as people expected, Shauna, but I think overall, that seems to be what investors had wanted in terms of the streaming story.
Yeah, and I think it's helping at least stem some of the losses here when we talk about the fact that that subscriber number is so critical in this report. Big reason why we're not seeing a larger drop, at least initially, I think, is because of that narrower than expected loss in the streaming giant. But they do have an issue, right, when it comes to when attracting new subscribers to Disney Plus. That number that we put out there, 146.1 million, clearly falling short of the street's expectations, also dropping about 7% from the previous 3 months. So, Akiko, this brings up the issue about what Disney needs to do in order to lure some new subscribers onto their platform. It's an industry that's up against some stiff competition out there. We know Disney recently raising its prices, trying to help some of the pressure that they had seen on their margins. Some of their cost-cutting efforts clearly helping the overall streaming business when it comes to the losses, but the inability and the fact that Disney fell short once again on that subscriber number for Disney Plus, you would think would be brought up a number of times in this call, Akiko.
Yeah, and we haven't even gotten to talking about the strikes that have been happening, right? Bob Iger has kind of been right at the center of that conversation, given that he was one of the ones that came out publicly and said, what the actors as well as the writers are asking is just not realistic. But look, I think this statement here in the release really points to what we're likely to hear on the call, which is Bob Iger was brought in to try and get the finances in order for Disney. And he's highlighting here that 8 months since my return, these changes have created a more cost-effective, coordinated, and streamlined approach to our operations. So, sure, that the sub numbers may not have been where they wanted it to be, but at least Bob Iger pointing to the fact that costs are coming down, and that's really been the focus of the company.
Yeah, certainly. And of course, we'll expect to get lots of questions from analysts on that call just about the direction of the company, the focus here for Iger, and how exactly he sees the reshaping of Disney forming over the next several quarters.